This
Here
conference will now be recorded.
regarding the subject, I'm the responsible person. Okay, fine. So yesterday and the last 2-3 days, we are learning like one is vendor invoice, vendor payment, customer invoice, customer payment. These are the 4 transactions you should know very clearly. Let me recap. So organization, just recap. Even though you are working in a software company, you need to imagine like you are running your business. And simply you are purchasing material and you are selling material. If you want to understand this purchase and sales process in depth, then it is a logistics process or trade and logistics process. Only invoicing is a part of finance. Remaining all are logistics, that is trade and logistics. And this is payment. So invoice and payment. And now for customer, you are generating invoice to the customer and you are receiving money from the customer. These are the 4 transactions you should know very strong. Apart from that one, you are going to learn some more transactions like check return, deposit cancellation. Like there are so many things you are going to learn. The first 4 most transactions are vendor invoice, vendor payment, customer invoice, customer payment. Vendor invoice, vendor payment, customer invoice, customer payment. Fine. Now let me open the notepad. So if it is a vendor invoice, you need to remember for vendor what happens, debit or credit. Because you are receiving material, then I need to pay money. It is credit. If it is a vendor payment, then my cash balance or bank balance is decreasing. Simplest shortcuts to remember. If it is vendor invoice, because debit means positive, credit means negative. So for vendor invoice, I need to pay money. It is a credit. I need to record in my books like I need to pay money as minus. Credit card. If you use credit card, that amount you need to pay to the government, to the bank. Debit card means your money is with bank. Okay, now I need to pay money so and so. It is vendor account credit at the time of invoice. So if you are receiving expense items, then it is expenses. Otherwise, if you are receiving material, then it is inventory. So expenses are inventory account data to vendor account credit. If you are receiving material like expense items like A4 stationery or water bottles or pens, if you are purchasing, then it is expenses account. Otherwise, inventory account data to vendor account credit. If it is vendor payment means here my cash balance or bank balance will be decreasing, it is credit, and vendor account will be debited. So vendor account data to cash or bank credit. Next one is if it is customer invoice, and customer payment. If it is a customer invoice, my money is with the customer, so customer account data positive. I'm going to receive money. This is I'm going to receive money from the customer. Receiving, I'm going to receive, and then customer payment means customer has paid, then my cash balance or bank balance is increasing. So here it is sales revenue account. Here customer credit.
Sir, a small clarification.
Yes, please. Yeah.
Based on commerce rule,
Ah.
the above customer invoice and vendor invoice all belong to credit transactions. Actually, whenever we use cash or bank accounts, that would be like actual payments, we can say. Whatever we are using names, vendor name or customer name, that would be pertaining to credit transactions. Is that the way we need to understand here, or is there any particular?
No. Can you repeat once again? Can you repeat as per the
Yeah,
commerce? Yeah.
as per commerce, like whenever cash or bank transactions happen, that would be the actual transaction, we can say. Whatever the transactions belong to, like if we are using names, that would be pertaining to credit transactions. Is that the way we need to understand, or is there any
Names means
particular?
names means.
Yeah, vendor is the name, right? Vendor and customer account, you're saying here.
So let me explain you golden rules. Just you need to apply golden rules. One is personal account. What it say personal accounts?
Debit the receiver.
Debit the receiver.
Credit the giver.
Credit the giver.
Credit the giver.
So that rule you need to apply. Credit the giver. He is giving the giver. Agree?
Yeah.
Debit the receiver. Agree? Next, golden rule. One is nominal accounts. Another one is real accounts. Real accounts. Next one is nominal accounts. What is the real account?
What comes in is debit.
Debit what comes in?
What goes out is credit. What goes out?
This is for always remember, this is for balance sheet. Nominal accounts.
Expense and loss.
Debit or expenses. Credit or
All incomes and gains is credit.
Credit on all incomes. Agree? This rule is for P&L accounts. Okay, agree? Any doubt? Now, this is if you are making inventory, it is an asset. This is asset. If it is expenses means it is loss or this is P&L. It is quite opposite behavior. Look at this one. Here debit means what comes in. Here debit means losses or expenses. So this behavior is quite opposite from balance sheet side to P&L side. In this, the expectation is more debits, whereas in this, the expectation is more credit profit is represented in negative. That is the only you need to remember. This is not given clarification whenever you are reading your commerce. People will think like profit will be positive. No, profit will be negative. It is quite opposite behavior. The sum of balance sheet plus profit and loss account should be 0. Trial balance is equal to balance sheet plus profit and loss account equal to 0. So here people will get confused about this one. Here expenses is debit, this is P&L side, this is balance sheet side, it is asset. Okay, here it is liability. So Rajendra, any
Yeah,
confusion?
got it. Thank you.
Okay. Many people will confuse about this one only. So here debit means positive, credit means negative, but the profit is showing negative. That is we will miss in your learnings BCom. There is a confusion to everyone, not only one person, everyone. Okay, fine. So you can apply like this. You can remember the way how I am teaching. Try to remember. Okay, so I will discuss this one once again later on. Okay, now let me explain you chart of accounts. So till now I have not discussed. Let me discuss with you chart of accounts. Chart of accounts is classified into balance sheet plus profit and loss account. Okay, so this balance sheet is divided into two parts. One is assets, another one is liabilities. Okay, so this is the only classification assets and liabilities as per the commerce. As per the commerce, it is assets and liabilities. Whereas in Dynamics F&O, we have one more. Under liabilities, there is equities. Okay, there will be one more equities. Okay, so chart of accounts in our system, it is 1 assets, 2 liabilities, 3 equities. As per the commerce, only 2 assets and liabilities. Always assets are positive balances. Positive balances. This is also called debitors. Of course, be silent debtors. Always majority times it is a positive amount. It is debtors. Liabilities are shown as minus represented. It is called creditors. Actually, equities, as I told you, it is not a separate one as per commerce, but it is a subset of liability. This is also creditors. What is this actually equities means? Actually, investors, company investors, whoever invested money in my company, whoever invested, company need to repay money to the investors. That is the reason it is creditors. Any confusion in this one? These three?
No, sir.
Fine. Next one is profit and loss account, also divided into one is income or revenue, another one is expenses. These are two. But these expenses are further classified into two parts. One is purchase expenses, another one is office expenses. These expenses are classified into two. One is purchase expenses, another one is expenses. So what do you mean by purchase expenses? Means whatever you are purchasing material for trading, water like washing machines, LEDs, laptops, fans, mobiles, projectors, whatever you are purchasing, that is I am making, this is also expenses, and I am making separate set of transactions. And office expenses, water bottles, tissue papers, salaries, courier charges, travel charges. There are so many charges. This was split into two. So here major confusion is this is positive, expense is positive, means debit. Here you are getting revenue, it is credit, that is called sales revenue. Through sales you are getting money, because whenever you are selling material you will get money. Okay, this is minus. So many people will confuse at this place only. Sales or revenue or income is represented negative, quite opposite behavior. You need to remember, like if you are a mathematics guy, x plus something is equal to y, then x equal to y minus something, means if it is moving this side to this side is minus. That's what you need to remember. You need to apply from balance sheet side to P&L side. The behavior is quite opposite. Understood? Mathematics people, science people. So revenue is minus, profit is minus, loss is plus. This is quite opposite. You need to adjust your mindset to accommodate this one. Positive, profit is negative, profit is negative, loss is plus, positive. So this 4 series sales revenue, it is minus credit balance. So this value will not be called as a creditors, it is represented in credit, that's it. But whereas here this will be called creditors, but this will not be called as creditors, it is income. So sales revenue or sales income will represent negative. That if you are giving instructions to your mindset, like income is a negative or minus or credit, then it will be cleared. Okay. 5, purchase expenses, or it is also called cost of goods. This is also called cost of goods. It is positive, debit balance, it will show you debit. And 6, expenses, office expenses, it is positive, debit. Clear? Any doubt in this? This is chart of accounts classification. 7 also there. This is other incomes. Other incomes are very, very less. This is minus credit. This is kind of bank interest received, like etc. This is very few, 1 or 2 ledger accounts only. 2 ledger accounts or 3 ledger accounts or 4 ledger accounts. Very few. But majorly these 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 is the major accounts. 7 is other incomes, means this one is through sales you are getting money. But if you are receiving money other than sales means you will not get money, to be frankly. Normally other than sales you will not get at any point of time. Bank interest, maybe bank interest, or if you have any building, if you have given rental purpose, then rent received. It is not paid, rent received. Your company has buildings and you are receiving money. This is very, very rare. In general, 7 series is maybe 1 or 2 ledger accounts, not more than that. Maybe 2, 3 ledger accounts, 4 ledger accounts. Next, 8 series, appropriation. This is combining all plus minus. Means to arrive the net profit or net loss, we'll do so many things. This you will understand later. Okay. At this point, remove that one. You need to remove all, you need to remember all these things. Any confusion in this one? Anyone? Chart of accounts are classified into balance sheet and profit and loss account or income statement. This balance sheet is further classified into assets, liabilities, and liabilities are further classified into equities also. So chart of accounts means assets, liabilities, equities, sales revenue, purchase expenses or cost of goods, expenses, other incomes. So in this manner, whether I need to remember, yes. Suppose I will take example, like suppose you are learning car driving. You are learning car driving. In India, you can take left turn free. Agree? If you want to take left turn, easily you can take it. Okay. In Dubai, it is right turn is free. In Dubai or in USA, United States of America, right turn is free. They will drive right side, not left side. Understood? So country to country it will be vary. Suppose you are learning in India car driving 2 days, and you are traveled to Dubai and you are learning in Dubai once again, and you are learning India, you come back and you are learning India, then it will be confusion. Agree? Can you learn that one?
Yeah.
So it is a confusion a lot. So you need to learn one sequence. I told you chart of accounts classification is 1 assets, 2 liability, 3 equities, 4 sales revenue, 5 cost of goods, purchase expenses, 6 expenses, 7 other incomes. Suppose client is telling like, no, one is my accounts, as per my accounts, one is sales revenue or revenue account. Yes, you need to proceed, but learning purpose, try to remember this sequence. For learning purpose, try to understand this sequence. Try to remind or try to remember this sequence only. 1 assets, 2 liabilities, 3 equities, 4 sales revenue, 5 cost of goods or purchase expenses, 6 expenses, 7 incomes, other incomes. Okay, let me show you in the system where it is available quickly. Let me go to application. So while learning purpose, try to use USMF company. Try to use USMF company. Okay, and click on here, general ledger module, collapse all, chart of accounts, chart of accounts. Look at this one. I'm showing you one chart of account. Suppose this one. One series assets. Next, two series. Look at this one. Two series liabilities. Two series are liabilities. Three series are equities. As I told you, it is separated. Actually, it is a liability. As per the commas, it is a liability. But in Dynamics, they have given as a separate series. Three series as equity. This equity is a subset of liability. Okay. Next, four series is revenue. And five series. Look at this one. Five series is expenses, but these expenses are COGS, cost of goods expenses. Cost of goods expenses means you are purchasing material, that material like accounts. Cost of goods expenses. 5 series. And 6 series office expenses. 6 series is expenses. 5 and 6 are series expenses only, but I'm spending money to purchase material. I'm spending money to expenses. 5 series and 6 series. So 6 series will be a lot. 6 series will be a lot of expenses. Okay, 7 series is very less, as I told you, maybe 2-3 accounts. 7 series through interest, bank interest you are getting, it is 7 series. And 8 series is, there are so many things that you will understand, our accountants will play a lot about 8 series. 8 series is, there are many things. It's a combination of mixer all. Okay, so 8 series, if you want, that is majorly accountants will take care about that one. If you want, we'll discuss this one later. So 8 series is, to arrive net profit, we need to do so many calculations, that is called appropriation. 8 series is appropriation. It is a mix of all together. There are many things inside. Loss, profit, asset, liability, all mixed to arrive the net profit. All these things combined together, at the end of the year, this will be shown as a profit or loss. Okay, any more questions in this one? Are you able to follow what I'm saying? Any confusion here?
Hi, sir. Sorry to interrupt you. I have a question.
Yeah.
So in these other incomes, can we think like the discount received whenever we purchase materials for inventory purpose? So we will be receiving some discount. So that discount can it be
No,
put in other
that
incomes? No,
that will be here only.
it will
No,
be
no, that will
profit.
be in this
Okay.
actually, because of exchange rate, you are getting gain or loss. And like if it is some because of selling an item, you are getting gain or loss. Like fixed assets. Fixed assets, if you are selling, if you are purchasing, it is fine. If you, whenever you are selling, there may be a loss or gain, am I right?
Yes.
And if your exchange rate is changing, then exchange rate, because of that exchange rate, sometimes it is profit, sometimes it is a loss. Agree?
Yes. Yes.
So all these accounts will be mapped here.
Okay.
So that is the reason it is a mix a lot.
Okay. Okay.
Mix a lot. So it will be separated as a, I don't want to mix all these things. It is crystal clear, all this one, but this is all, I cannot speak kachra, but it is a mix of all. Sometimes profit, sometimes negative, plus, minus, and everything.
Okay, sir.
Okay, fine.
Sir,
Any
I have a
questions?
question here.
Yeah.
Yeah, sir.
Yeah.
Sir, you told that we should follow asset as 1, liability 2, 3 with the numbering series. So example, whether when a customer buys the application, whether this default grouping will be given in the system. And one more point, you told that when a client required, we can change the number 1 asset to asset instead of asset 1 as liability as 1. So how to?
So you are not going to create this in the, if you take a license, it will be blank. You need to collect the numbers from the customer. Customer will give you, the client will give you the numbers, and you need to import or you need to upload the data. So this client will provide the data.
Okay, that means the chart of accounts will be blank.
Yes, exactly. It is a blank. You need to create as per the client requirement. While creating, you are going to propose. Suppose customer is following in some other way, you are going to propose this is a best practice. It is not a rule. So these are rules. Whether you are interested or not, you need to follow. These are rules. Okay, these are rules. This is best practice. This is best practice. Agree?
Yes, okay, thanks.
Fine. So you are going to propose the easiest way. If customer is interested, they can change it. If the customer is whatever they said, you need to follow. You don't have alternative solution. This is customer decision. But you are going to propose that information to client wherever you are implementing. But for learning purpose, try to remember this sequence only. For learning purpose. While implementing, if customer is asking differently, you can map differently, whatever it is. Fine. I hope it is clear. Any questions? Any more? Any confusion? See, if you are confusing, ping me, ask me immediately. Even though it is confusing, if you are not able to follow, you can ask me, you can interrupt me at any point of time, so that I will give clarifications first and I will proceed. Fine. Next one is
the one which you showed in application, chart of accounts application. Those were already defaulted one, which we are able to see here, or you have already created?
For these companies, it was created already.
Okay.
So it is already created for this company. It is created, so you are using. That's it. But if it is a fresh company, if you are taken license from Microsoft, you will find only one company called DAT company. This is the only one company you will see, and you will not find any data in this. You need to create everything. Okay. So in DAT company also it is showing. This is another function, enterprise level data. I need to explain you one of the topic. You will understand that one. Okay, enterprise level data or cross company data. One of the topic which I need to discuss in this. I have discussed like ERP concepts. You will understand in that topic. You will understand what do you mean by why it is showing and everything. Okay. If it is a fresh license, you need to create newly everything. Okay, fine. So look at this one. Brazil is following the chart of accounts 1.1, 1.1.1. In their country, they will follow this chart of accounts. This is their way of the presentation. So Chinese is following differently. and French people are following differently. And India has almost
It-
same. Yes, please.
Yeah, mandatory rule which we need to follow, or based on client requirement, do we follow number sequence?
Everything is as per the client requirement only, as per the
Okay.
client requirement. But in their country, they are following. This is majority companies, they will follow like this. That is the reason Microsoft has given the best practice. Okay, so India is almost same like shared chart of accounts. Shared chart of account, I mean to say here, one chart of accounts are there. This chart of accounts and India chart of accounts are almost same. So Japanese are following differently. Okay, and Malaysians are almost same, normal like a shade, but Microsoft has given different chart of accounts for different country. So Mexico has their following like this, and Russia is following like this. Look at this one. Even you cannot read Russian language. It's very difficult. So like this, samples was given by Microsoft. It does not mean like you need to follow, but majority countries in the world, this same set of chart of accounts will be followed. Okay, Microsoft has given for each company, they have given different chart of accounts, and you need to follow. Okay, so as I told you, this is not a rule. This is only best practice. This is only best practice. So if customer wants, like, I want one is expenses, yes, you need to follow. You don't have anything, but you are going to convince, you are trying to convince, this is a majority companies or majority countries will follow this one. Try to use this one, try to adapt a best practice. You can suggest, but you cannot insist him. Okay, fine. Next one is financial year or fiscal calendar. Fiscal calendar. Fiscal calendars means the financial year. So in India, what is the format we are following? Anyone? Financial year?
I think June to June, right?
April to March.
April to March.
In India, it is April to March. What exactly? First
April
April
21st to March 31st.
to 31st March. So how many months it will be there?
12 months.
12 months. April, May, June, like this. Jan, March, sorry, Feb, March. Okay, total 12 periods. That is 12 months is called 12 periods. Along with this one 12 periods in our Dynamics F&O, one more. This is called period 1. This is called period 1. This is called period 2. This is called period 3. Like this, this is period 10 and period 11, period 12. Okay, and along with this one more period will be there, period 0 and period 13. One is for opening. This is for opening. And this is for closing. Total 14 periods will be created. In SAP, it is 16 periods. In SAP, it is 16 periods. In Dynamics F&O, 14 periods. Financial calendar is created 14 periods. Let me show you this one. General ledger, collapse hall, calendars, fiscal calendar. Any calendar, suppose this is April to March. Period 1 is April 1st to 30th April. Period 2 is May 1st to May 31st. Like this, 12 periods are there. Period 12 is March 31st, March 1st to March 31st. But period 13 is extra. Period 0 is extra. Period 0 is opening. Period 13 is closing. What is this period closing and period 13 and period 0? You will understand during year-end close process. One of the topic you are going to learn, year-end close process. During that one, you will understand the entire process. But you need to remember, there will be 14 periods will be created. If it is India, it is April to March. If it is suppose some other country, like take the example Dubai, Gulf countries, it is Jan to December. Jan to December. If it is USA, suppose Microsoft is following July 1st to June 30th. All right. So if anyone knows about Microsoft, Microsoft will follow 1st July to 30th June. And if it is Accenture, they will follow it is September 1st to August 31st. In some Europe companies, they are following November 1st to 31st October. In Australia, they are following May 1st or May 1st to April 30th. Country to country, it is different. You need to create a calendar in the new company. Any calendar in the entire world, any calendar, it is 12 periods, 12 months only. But starting period and ending period may change. I saw Australian companies, some Australian companies, they are following May 1st to April 30th. And I saw Europe companies from October 1st to 30th September or November 1st to 31st October. Yes, please. Someone else is going to speak. Yeah. Anything else? Okay, no questions, I think. So financial calendar or fiscal calendar, you need to create in the system whenever you are discussing. Okay, next one more topic, small topics I'm discussing today. Currencies. In the system, we have three major currencies will be there. Of course, currencies are India has INR, Indian rupees, INR. USA follows US dollars. Australia follows Australian dollars. China follows China yuan. Malaysia follows Malaysia ringgit. It is Oman Riyals. Okay, Dubai, Arab Emirate Dirhams, AED, Arab Emirate Dirhams. Saudi Riyals. Each country will have different currencies, but in our system we have three terms about currencies: accounting currency, reporting currency, transaction currency. Any transaction, if it is posted, it will show you three currencies: accounting currency, reporting currency, and transaction currency. Let me show you this one. So yesterday we did customer invoice, but we have not done customer payment. Let me do a customer payment. Okay, let me do a customer payment. So if you remember, yesterday we have discussed invoices. Customer invoices can be posted in two different ways. One is free text invoice we learned. Another one is sales order invoice we learned. Okay, customer payment I have not explained. Now let me show you customer payment. Okay, and I will show you these three currencies in the system. Let me show you customer payment. customer payment. So let me go back to the system. Accounts receivable module, collapse all, payments, customer payment journal. Customer payment journal. So click on new button, select the customer payment. Click on lines button. Click on lines button. So the date is coming from fiscal calendar. The date is coming from fiscal calendar if you configure. So where we need to configure, we'll discuss later. We need to understand a lot of setups and everything. Okay, voucher series, it is coming from somewhere else, that you will understand later. Not now, after 1.5 month or 1 month. Number sequence. So because you need to understand so many things. Now select the customer, from which customer you are receiving money. That customer you need to select, whatever the customer it may be. And now, so whenever you are receiving money from the customer, bank will be debited, bank account will be debited. So if the bank is debited, then customer will be credited. So I need to enter customer. From the customer I am receiving money. From the customer I am receiving money. So customer account will be credited, then opposite account and bank account will be debited. So in our learning also the same thing. Cash or bank account debit and customer credit. The same thing. Bank account is debited and customer account is credited. So it was tallied. Now if you are receiving money from the customer means through check, that check number you can enter here, reference number. So as a best practice, always you can write down like 15 DEC 21. Okay, regarding this payment reference number, we'll discuss on Monday in detail. And Monday we'll discuss. This is payment reference number means through check you are receiving money from the customer, because you will receive usually checks. Usually it is checks. So check number we have entered. Now let me do post. So now if you click on the voucher, look at this one. It was posted in 3 currencies. One is amount, means amount in accounting currency. Next one is amount in reporting currency, amount in transaction currency. First is amount, means amount in accounting currency. This is called national currency or monetary standard, something it is showing. Amount in monetary account standard or national currency means wherever the company is available, that company currency is amount in accounting currency. This is reporting currency. For extra reports, if you want, you can get currency. Transaction currency means whenever you are doing import or export, currencies will be changed. That is transaction currency. So each and every transaction, not only this customer payment, every transaction in the Dynamics F&O, any transaction is posted, it will post in three currencies: amount in accounting currency, amount in reporting currency, amount in transaction currency. Every transaction in the Dynamics F&O or Dynamics AX, old version is AX, now new version is F&O. For all versions, the transactions will be posted in three currencies: accounting currency, reporting currency, transaction currency.
Could you please repeat reporting currency again?
So accounting currency means, remember, all the reports will be generated. All the reports will be generated in accounting currency, not in the reporting currency. People will confuse by looking into this one. Reporting means reporting currency means reports will be generated. No, all the reports will be generated in accounting currency. Means if you are running your business in India, I want every transaction will be INR only. If your friend is asking like give me 100, you did not think like he is asking $100. You will think like he is asking 100 in Indian rupees. Am I right? Agree?
Yes, yes.
So that is all reports is in accounting currency. Then what is this purpose? What is the purpose of this reporting currency? So suppose I'm planning to establish one more company. I have two companies. One is in Hyderabad, one is in Mumbai. One is in Hyderabad, one is in Mumbai. Both are in India only. Now I'm planning to establish a new company in Singapore. This is my plan. Now I'm approaching Singapore delegates, some other people, partners, so that I can establish one more company. Then I'm telling like, so I'm running my business 1,000 crores of rupees. He will not understand 1,000 crores of rupees means what do you mean? Then I will tell like $500 million, $1,000 million. Then he will understand, oh, how big it is. So if I'm showing a report in some specific reports in US dollars, then they can understand what exactly my business. Agree? In the entire world, if I'm speaking in INR, they cannot understand. They will understand if I'm publishing to, suppose I'm planning to establish one, I'm thinking whether I need to go for Singapore or Australia or Malaysia or some other country, Canada. Then everywhere I want to publish my trial balance, my balance sheet, and I want to showcase to my business to what is my turnover and everything. If I'm showing in INR, they will not understand. Then if I'm publishing in US dollars, then they will understand my business. So I can use US dollars as my reporting currency. Agree? So this is specific reports only. And transaction currency, usually transaction currency and accounting currency will be the same. If in case exports or imports, then it will be different.
If currency varies, then only like we should go with reporting currency, right?
No, usually we'll map it, at least one currency. We'll map it. Your wish, whether you want to map it or not, this is optional.
Okay.
This is optional.
I
But
think
yeah.
the reporting will be in the company currency, right?
No, reporting currency. See, that's why I'm telling you, accounting currency is the company currency. And all reports will be generated in this one. This is optional. This is optional only. If you want to use it, you can use it. Otherwise, you can skip.
Yeah, I just said because in case of Europe, they use euro as the currency, but
Yes.
individual countries are having their own currencies, right? So
Yes.
even though they transact mostly in euro, but they will be reporting in their individual company currencies.
Yes. So then in that case, they suppose Spain or like Switzerland, then they will use euro as their local currency like euros, and like Swiss crowns, they can use this one like. Otherwise, their wish, if they want Swiss crowns here, their wish, and they can map euros here, your wish, based on their country requirement. So whenever you are submitting to government of authorities taxes, the taxes whatever you are submitting, then that tax currency is this one usually. You need to submit to the government of authorities. In India, I need to submit my reports, everything to my government of authority India. I need, then INR is my currency. Get my point? Any confusion, any arguments? I'm always welcome.
Excuse me, sir.
Yeah, yes, please.
If a company has its operation in more than one country, like India, they are submitting their taxes in Indian currency, suppose accounting currency, and in other countries, how do they report? I mean, how do
So
they submit
I
which
need to
currency?
create company A here in India. I need to create one more company in another company B. This is in Singapore. Then this is a different company at all. Am I right? So like this, we have USMF company, you have DMF company, you have INMF company like this. This is a different company at all.
But that company is subsidiary, no? Like this is not like separate company.
Yes, we can
Subsidiary
create that is consolidation process. One more module called consolidation, that you can do it. But it is a different company. That is consolidation company is a head. So you can generate reports from this one consolidation. So this one we can have a lot of healthy discussion, definitely arguments, like one is branch, one is company, one is head office, another one is suppose in India we have one is each state has another company. Suppose one company is in Hyderabad, another company is in Bangalore, another company is in suppose Warangal. Then there is an argument whether these are companies or whether it is a branches. So based on the client requirement, you need to discuss how customer looks the data. Based on that, whether you want to take it all these three as branches, or all these three are companies, or these two are branches. Under Hyderabad, I will create Hyderabad one branch, Bangalore, Warangal is one branch, and I can create this company. This is healthy discussions. Definitely we are going to discuss. So there are two terms. One is legal entity, means company. Another one is business unit. So this healthy discussion should be happened during consolidation. In coming sessions we are going to learn. Legal entity means branch, a company, sorry, legal entity means company. So Hyderabad, I will create one company, Warangal as one company. If it is, we need to analyze their data, customer data. What it means, suppose the customer wants Hyderabad, in this Hyderabad, whatever inventory is there, I don't want to show Warangal people. For Warangal people, I don't want to see Hyderabad data. Then you need to create different legal entity. No. It should be shared. I need to create these two as business units. So we need to discuss a lot how customer wants the data. One is security permissions, another one is like the reports, how they want. Based on that, whether you are going to take a legal entity or business unit. And if it is, suppose I have created company A, it is one legal entity, company B, I have created another legal entity, then I can do consolidation as a head, like a parent company. These companies are child companies or daughter companies or sister concern companies, whatever it may be. This is a consolidation company I can create and I can generate reports. There is a hierarchy you are going to learn in coming sessions, not now. I have given like a temporary solution. I mean to say clarification only. I will detailedly explain you about this one in future.
Can you explain me on transactions currency one more, sir? I'm not clear.
Transaction currency means, suppose I'm importing material from Dubai. I'm importing material from Dubai. So then my vendor will give in AED. Am I right?
Okay.
But my currency is INR.
Yes.
So it is, if I'm importing from Singapore dollar is my transaction currency. For that specific transaction only, the currency will be changed. Got it? Is it clear? I think Rajendra or someone else is speaking.
I think, yeah, a little bit confused. I think it looks like reporting currency, the imports and exports also, like it seems to be.
No. Reporting currency is optional. You may not map it. You can skip. This is not mandatory at all.
Okay.
Not required. But these two are automatically will be mapped. First thing is you are mapping INR. And if you are not importing and exporting, if you are not doing any imports and exports, then this is also INR only. Always. Both are same. If in case exports or imports are there, then instead of this INR, it will post to whatever you are mapping that currency. Got it?
The sales order or purchase order currency can be the transaction currency.
Exactly right. It is not only sales order, purchase order, vendor invoice journal. Invoice journal.
Yes.
That also may be a different currency. That is the reason. Yeah.
Sir, in set, so example, we have done the configuration as initially the company started. They were not that they are doing an import and export. At a later stage, they started doing import and exports. At the mid of the session, again, can we change the transaction currency? Can we modify that in the system?
Transaction currency is not a fixed one at all.
Okay.
Only accounting currency and reporting currency will be fixed. This will not be fixed at all. This is on the fly. Whenever you are doing, at that time you are going to change.
Okay.
But these two are. Yeah, tell me.
Do we give option to client to change their currency accordingly, like as per their?
So, while creating a company, you need to take the decision. These two are fixed. You cannot modify.
Okay.
In between, you cannot modify. If you want to modify, you need to create a new company. We don't have alternative. This one is on the fly, it will be changed because I don't know from whether I am going to import from Australia, whether I'm going to import from UK, whether I'm going to import from Australia, USA, or I'm going to export to USA. I can export to Canada, I can export to China, I can export to Dubai, I can export to Saudi. Am I right? It is not in your control at all. So this will be keep on changing as per the requirement. If it is not exports and imports, then INR will be posted as a transaction currency.
So for example, if we are dealing with Australia, we are exporting material to Australia. Then what would be the reporting currency? What would the accounting currency?
Accounting currency is INR because we are in India, and because we are exporting to Australia, transaction currency is Australian dollars, and the reporting currency is your wish, what you have mapped. It is optional, it is not mandatory at all.
Okay.
Usually US dollars. Usually it is US dollars.
Can I say one thing? The vendors and suppliers will have their own currencies,
Exactly.
and that currency will be used for the transaction.
Yes. Yes. Yes, exactly. So that vendor, if it is INR, then it will be INR. That customer is INR, then INR. If customer is currency is, suppose customer is in Dubai, I'm exporting to Dubai customer, then in the customer I will map AED as my currency, then transaction currency will be AED. If customer is in suppose Netherlands currency is euro, then the customer I will create and will map Netherlands as a currency, euro as a currency, then transaction currency is Netherlands. It means I mean to say euros. If I'm exporting this like Switzerland, Swiss crowns is their currency, they want that currency, then I can map Swiss crowns as vendor currency, then transaction will be posted in that currency. So this is not a constant at all. This will be keep on changing. If it is not changed, then it is INR. Because if it is customer is in India, then it is INR. If vendor is in India, vendor INR. Make sense? This is optional, purely optional. Your wish, how you want. Okay, I hope it is clear to everyone. Anyhow, we will discuss about foreign currency revaluation, one of the topic, FCR, foreign currency revaluation for AP, AR, GL, cash and bank. You are going to learn these topics, foreign currency revaluation. At that time, we need to discuss a lot. So each and every topic I'm just introducing today, like from last 3-4 days, I'm introducing. You need to learn a lot in depth. Okay. Any more questions, please?
Hi, sir. Can
Yeah.
you repeat accounting currency once again? It's a little bit confusing.
Accounting currency means simple, wherever you are staying. If you are in India, INR is your currency, right? INR means Indian rupees. Suppose you are traveling to UK, can you use INR rupees in the UK?
No.
No. Which currency you will use?
Dollars.
Pound, UK pounds. In
Pounds,
US,
okay.
UK,
Okay.
it is UK pounds. So you will take UK pounds. Otherwise, euros. Then that is their currency, accounting currency. Simply, accounting currency means the country currency.
Okay.
The country, that's it. Country currency, wherever it is the company is located, that currency is accounting currency.
Okay, sir. Thank you.
Fine. Welcome. Any more questions, please? Anyone? So if nothing, then we can wind up the session for today. Okay, we'll connect once again tomorrow morning, same time, 8 a.m. IST. So whoever
Thank
is
you, sir.
paid, yeah, welcome. Whoever is paid, we have already created one group, and you are going to get access for video recording sessions by today. You will get video recording sessions. Okay, whoever is paid, it is please ping in the group. Already I have created one group. In group, actually it was already added by me and institute together. So you can ping your email ID in that group, so that institute will arrange you video recording sessions to access. Okay, so please try to pay at the earliest, the fee at the earliest. Fine. See you all. Bye bye.
Thank you, sir.
Thank you.
You're welcome.
Bye bye.
Okay, sir. Thank you.
You're welcome.